Picture this. You wake up on January 7th, 2026, check your phone and see gold prices have crashed 20% overnight, while silver soared to heights not seen in decades. The financial world is in chaos. Traders are panicking. Economists are scrambling for explanations. But here's the twist. None of this actually happened. Yet the very fact that we can imagine it, that we've been conditioned to see gold and silver as these mystical stores of value that move in predictable patterns, reveals something profound about the illusion we've all been living under. Today, I'm going to show you how January 7th, 2026 marks the quiet end of the greatest monetary illusion of our time, and why understanding this changes everything about how you think about wealth, security, and the future of money itself. For thousands of years, humanity has been obsessed with shiny metal. Gold has been the ultimate symbol of wealth, power, and permanence. Silver, its more accessible cousin, has played the role of practical money for everyday transactions. We've been taught that these metals have intrinsic value, that they're safe havens in times of crisis, that they'll always be worth something because they're rare, beautiful, and useful. Entire investment strategies are built on this foundation. Governments stockpile gold in underground vaults. Preppers bury silver coins in their backyards. Financial advisors tell you to keep 5 to 10% of your portfolio in precious metals as insurance against economic collapse. But what if I told you that this entire framework, this gold and silver paradigm that's shaped human civilization, is fundamentally an illusion, and that illusion is finally breaking down in ways most people haven't even noticed yet? Let's start with what happened in the months leading up to today. Throughout 2025, we saw unprecedented volatility in precious metals markets, but not for the reasons you might think. It wasn't wars or inflation or central bank policies that were causing the disruption. It was something far more fundamental, a shift in human perception itself. You see, the value of gold and silver has never been intrinsic. That's the first illusion we need to shatter. Gold doesn't feed you. It doesn't keep you warm. You can't build a house with it. Its value exists purely because we collectively agree it has value. It's a shared hallucination, a social construct that has been so deeply embedded in human culture that we mistake it for natural law. But all social constructs eventually evolve, and some eventually collapse. The cracks in the illusion started appearing years ago, though few recognized them for what they were. Bitcoin and cryptocurrency entered the scene claiming to be digital gold, and while many dismissed them as speculative bubbles, they revealed something crucial. They showed us that humans could assign value to literally anything if enough people believed in it. A string of code could be worth thousands of dollars. A JPEG of a cartoon ape could sell for millions. These weren't aberrations. They were demonstrations of the fundamental principle underlying all value, collective belief. And once you see that principle clearly, you can't unsee it. Gold suddenly looks less like a timeless store of value and more like just another agreed-upon fiction, no different from fiat currency or NFTs or cowrie shells used by ancient traders. But the real shift happened in the industrial and technological sectors. This is where January 7th, 2026 becomes symbolically important, not because of a dramatic market event, but because it represents the tipping point where industrial demand fundamentally decoupled from investment demand in ways that made the old narratives obsolete. Silver, for decades promoted as both an industrial metal and an investment vehicle, found itself caught in a technological crossroads. New battery technologies, advanced solar panels, and medical applications were consuming silver at unprecedented rates, but simultaneously, material science was producing alternatives that could replace silver in many applications. The industrial case for silver became simultaneously stronger and weaker, creating a paradox that traditional investment analysis couldn't resolve. Gold faced its own reckoning. Central banks, long the bedrock buyers of gold reserves, began quietly diversifying into other assets. Not dramatically, not with announcements that would spook markets, but steadily and inevitably. Why? Because in an age of cyber warfare and digital economies, sitting on tons of metal in a vault seemed increasingly anachronistic. Gold doesn't generate yield. It costs money to store and secure. And in a world where economic power is measured in data, technology, and human capital, hoarding inert metal felt like building castles while everyone else was launching satellites. The psychological comfort gold provided, that feeling of tangible security, started to feel less like wisdom and more like superstition. Here's what most people miss about January 7th, 2026. It's not about what happened on this specific day. It's about what this day represents in the broader narrative arc of human economic evolution. We're living through the transition from a scarcity-based economy to an abundance-based economy in certain sectors, and from a physical asset economy to a knowledge asset economy overall. In this new paradigm, the idea that wealth should be stored in metal buried underground seems increasingly absurd. It's like insisting that the most valuable thing you own should be beads or spices or any other commodity that once served as money. Yes, gold and silver have practical uses. Yes, they'll always have some value. But the special status they've held, the mystique, the idea that they're uniquely positioned as stores of value, that illusion is quietly ending. The implications are staggering, and most people haven't begun to process them. If you've been stacking silver coins, expecting them to be currency in some post-apocalyptic scenario, you're operating on outdated assumptions about how societies actually function during crises. If you've been buying gold as insurance against inflation, you're using a strategy designed for an economic reality that's rapidly disappearing. Modern inflation is driven by supply chains, energy costs, labor markets, and monetary policy in ways that have increasingly little connection to gold prices. The correlation that once existed is breaking down. And if you're holding precious metals because everyone says you should, because it's what smart investors have always done, you're following tradition rather than thinking clearly about the present moment. So what does the end of the gold-silver illusion actually mean for you? It means waking up to the reality that all value is subjective and socially constructed. It means recognizing that the real stores of value in the 21st century are skills, relationships, knowledge, adaptability, and access to networks and systems. It means understanding that security doesn't come from hoarding physical objects, but from building resilience and capability. This doesn't mean precious metals are worthless. It means they're just commodities with industrial uses and speculative interest. Nothing more and nothing less. They deserve no special place in your worldview or your investment strategy beyond what their actual utility and market dynamics justify. The illusion ending is actually liberating. It frees us from ancient superstitions about what constitutes real wealth. It allows us to think clearly about how to build security and prosperity in the world that actually exists, rather than the world our ancestors inhabited. It reveals that the emperor has no clothes, that gold's gleam has always been more about psychology than economics, that silver's shine has always reflected our beliefs back at us rather than possessing any magical properties. January 7th, 2026 won't be remembered as a day of market crashes or dramatic revelations. It'll be remembered, if it's remembered at all, as the quiet day when the old illusion finally finished fading, when enough people woke up to reality that the collective dream could no longer sustain itself. The question now is what we build in its place. What new shared fictions will we create? What will we collectively decide has value in this new era? And most importantly, will we be conscious creators of these new systems, or will we sleepwalk into them the way we sleepwalked through the gold and silver illusion for millennia? The choice, as always, is ours. The illusion is over. Now the real work begins.